Next update is going to be on Kadena, and you guys are absolutely tiring me out. I promised 6 videos today, so this is going to be the third video. Go back and watch the ICP video. Go back and watch the Theta video. What else have I got today? I got Pepe, Agape, and Fetch, so stay tuned for those ones. Hit the notification bell and you'll be notified exactly when I drop those. What we've done on Kadena is we've started off with a naked price chart. You can see I haven't built in any kind of trend lines on here. I haven't built any Fibonacci numbers on here. I haven't built in anything on here. We're going to start off with a naked price chart. We're going to do this together. Why is this a good chart? Firstly, look at it now. Can you see a support base anywhere? You can see a support base down here. Where are we now? We're at that support base. So you can see that we're trending in a range, and we've been in this range for such a long period of time. And we talked about in the last video how you can understand and identify what key resistance barriers you need to overcome before you start getting the bigger swings. Because ultimately, this was the all-time high all the way up here on Kadena, $9.69, $9.69. So it's currently trading at 39 cents. Is it going to go back to the top? We're not banking for something to go back to the top because there's less of a probability of that happening. Do you actually need something to go to all-time highs and beyond? Let me give you an example. Ethereum. Is Ethereum going to do a 2x? Is Ethereum going to do a 3x? Is Ethereum going to do a 4x? There's less probability that Ethereum is going to do a 3 or a 4x from its previous all-time high. Why is that? Because it hasn't got enough liquidity within the market to be able to push and drive something that's got such a big market cap like Ethereum all the way to those levels. So how can you identify and understand how you can do that within small caps? This is what I'm going to show you. We're going to identify the range. And the thing that we do best on this channel, we're not greedy. We're discounting the whole of this area. We're waiting for the bear market to settle. And this is where we're going to stick our Fibonacci level in. And I talked about a key level on this, which isn't usually that relevant with most coins. There's the swing high all the way down to its bear market low. Now, you can see the sticking points already on these Fibonacci levels. Look how price respected each of these levels. We'll go through them. You can see it either acts as support, resistance, resistance, support, resistance, all the way through these Fibonacci numbers. Look, breaches that. Where does it settle? Back down to the next fib level. Where does that settle once it's dropped? Back down to the next one. What happens when you drop it? That becomes resistance. What happens when you break through? Becomes support. And then you've got to expect it to act as resistance or support, or for these to be key sticking points at any point when we hit that and become either overbought when we're hitting resistance or oversold when we're hitting support. So that's the aim of the game, guys. Are we overbought? Are we oversold? Are we at support? Are we at resistance? It's as simple as that. Now, in the last Kadena video, I did one thing. I put in a different Fibonacci number. Why was that? Because the Fibonacci numbers were respected on the 236 with price action on this. So we're going to add in the 236 and we're going to see how this is respected, because it's going to give us an indication of to what level we need to break next. So we've added the 236 in. Now, look, you've got support here. You've got support here. You've got support here. You've got to expect this 236 to act as resistance. And that 236 is sat at 81 cents, 0.8137. You've got your support base down here. Your support base is 31 cents. And if you just look at the risk to reward, just from where price action is now, zoom in, you've got 15% risk to the downside, and you've got 110 risk to the upside. So what I'm saying is for Ethereum to do a 2x, that needs to double in market cap when it's got such a huge market cap already, when something like Kadena just needs to do a little swing that is done lots of times before to get that 100% move. That's a 2x. A 100% move, guys, it's done it here, it's done it here, it's done it here, it's done it here, it's done it here. This is during the bear market. This is during the accumulation phase. So you can look and you can identify further down the risk scale how you can get these bigger moves with just little swings. So that's why I like Kadena. Right now, Ethereum and Kadena, two different things, completely two different things down the different types of risk curve. So what does that mean? We look at Kadena, we just look on CoinGecko, Kadena. This is important, guys. Don't put all your eggs in one basket. If it's high risk, there's a chance that it might not succeed. We can just look at analysis, and I could look at analysis on here and I could say it's happened before here, it's happened before here, it's happened before here, it's happened before here. It's a high probability that it's going to happen again. People that think that they can hold cryptocurrencies for years and years and years are going to hold them all the way to the moon. Your P&L is going to go right up, and guess what? It's going to go right back down to zero. So make sure that you've got an exit strategy. And what I'm saying is this is 436 as far as the crypto ranking's concerned. What does that mean? As far as market cap's concerned, 128,867,850. So it is a low cap. Treat it as a low cap. Remember, none of this is financial advice, but if you've got a pie chart and you're looking accordance to risk, you've got Bitcoin, which is the biggest part. You've got Ethereum, the second biggest market cap. And then you've got your allocation of whatever you've got in there in accordance with risk. That is 436. Treat it as 436. All I'm saying is that has happened previously before, time and time again, during the past few months, during the past couple of years, during this accumulation phase. That's a conservative move. And that is where you can get a 100% move from just a little bit of risk. We know that that risk is there because that hasn't been broken for the whole of this move. We can put in the trend line. Hasn't been broken for the whole of this move. So we understand that the risk to the downside is here. When does this go back? All the way back here. 23rd of August, 2022. So is there a possibility that it can go below there? Anything can happen. Is there a probability that it can go there? No, because it hasn't happened in years. So that's how you look at risk to reward. That's how you look further down the risk curve and how you can identify how you can get moves like a 2x within small caps using a smaller amount of capital and just going for smaller moves. If you're shooting all the way up here at the 786, and guys, this 786, 382% to the upside. During the bear market, it's been hit once, it's been twice. This is the bear market we're talking about. So when you start seeing bigger swings going in accordance with the risk curve, you'll start seeing bigger swings on things like Kadena. Right, okay, what have we got next? We've got Pepe coming up next. The last video was Theta. Go back and watch the last video. If you haven't seen the ICP update, go back and watch the ICP update. Told you it was going to be jam-packed, so don't forget, subscribe to the channel. I want to try and get 100 subscribers today. We're on 10,406, so I've got 6 so far, guys. 94 to go. Help me on my way to 10,500, and I'll see you guys in the next one.